If we look at what's happening in the market, then we've got oil, which is somewhat staggeringly testing 28 today. We've got China, who reported better than expected GDP numbers, at expected GDP numbers yesterday, and though a relatively low figure, there's no reason to suspect that they're massaging data, that they're not telling the truth. That's really, it's no more reasonable to fire that at them as it is to any government on the planet. And you can believe or not believe the likes of Mark Faber, the doom and gloom man, who suggests that real Chinese GDP is around 4%. But nevertheless, the worries are there. Chinese earnings, China and oil aside, we are at the start of earnings season in the US. We had Morgan Stanley come out yesterday and reported positively, and we saw them shoot up 4% before the IMF came out and decided to downgrade their forecast for the global growth this year. So look, after the banks, we start to move into the industrials and more of the tech side of things. I think we've got eBay and Goldman Sachs today. Goldman may have already reported at this stage. Expectations about earnings are low, so generally speaking, whenever that's been the case, they've beaten expectations. But of course, earnings is on the back burner, somewhat surprisingly, somewhat rarely, compared to what's happening in the oil and oil markets and China. In terms of the data coming out, we've always had some data out already. There we go. And really, that was the data coming in we're a little loose on housing starts, but building permits increased. So a mixed bag of data. CPI is deflationary, obviously no inflation there for the month-on-month figures, although the core CPI, which removes oil from the equation, is still in positive territory. None of those figures are surprising and certainly didn't impact on the futures negatively. As I said before, if you could hear me, the futures are probably slightly better than they were a couple of hours ago, but nevertheless, it's still pretty miserable territory and likely to take us below those key levels that we saw before on the charts. Thanks for the update. Goldman Sachs profits down. Thanks, Ron. Let's quickly see what pre-market's doing on. If we just Google finance is probably the quickest way to find that. Let's just type in Goldman Sachs and see what's happening pre-market. Yeah, not down significantly, down less than 1%, which compared to the market as a whole. We'll just quickly look at the how the SPY is going to open in pre-market. If you haven't come across just using this for a quick check, then hopefully that's useful. Yeah, SPY is down 1.5%, which if we see there's the latest figure on the S&P 500 ETF. So not looking particularly happy at the moment, but again slightly better than we were expecting earlier on. Pretty key. I'll just give the screen a chance to catch up. There we go. Pretty key, as you see on Forex Factory, the crude oil inventories out at 11:30 p.m. my time. That's 10:30 a.m. US EST. They're going to be pretty key in terms of where what happens to oil today, and may well be key to how the market responds for the rest of the day. Bearing in mind that we're going to open sharply lower. So that's all sort of interesting. Let's close that down. So in terms of where we're at, as I said before, the bears are undoubtedly in control. There's selling volume in abundance. The VIX is just below another key level, around about 27. We expect that to be tested tonight. Probably will spike up way above that almost after open, and so that's the big picture stuff. And it's always, whatever you're trading, it's always worth having that big picture view. So for some reason I've just quickly grabbed a chart. For some reason my futures feed isn't working, so I've just grabbed this off Finviz. So here's a monthly chart on crude oil, just to show you how miserable it is. Down at 28.79. This was about 2 hours ago. So we are sort of testing key levels there. We may well see it down to around about 23 if we see any further selling, and if the oil inventories come down with a lesser drawdown than expected. So that's where it's all at. Now if we move on to the currency markets, good to hear, Jordan. Yes, Raman, I'm the options guy at Hawkeye. As I said before, trade most vehicles. At this stage, one of the key signs that we may see a reversal when the selling stops is that when the market stops responding. At this stage, it is responding poorly to good news and responding badly to bad news. And so one of the key things we look for when we're suggesting that there might be a bottom forming is that reverses. We tend to see that the market ignoring bad news and buying on good news. So just keep an eye on that over the next few days with the data that comes in. Obviously, technically, we're in a bit of a scary place. For you currency traders, one of the things that I've always taught is have a look at the bigger picture first. So if we look at the Euro USD, it's in an interesting place. And this was actually an options trade we put up yesterday on the Trade Alert service. Put in a bear call spread at 109.110 on the ETF that tracks this, which is FXE. But if we look at this, we'll see the Euro USD really in a range. It's very much in congestion. We've got 107 on the downside, 110 on the upside. If we look at the ETF, it's trades slightly different. 105 on the downside, 109 on the upside. So it's worthwhile having those for any currency pairing that you're thinking of trading. Get the context, get where it is in terms of the longer term lines. And it's exactly the same for futures, same for equities. I can't stress how important that is enough, really, because price is an irrelevancy almost. It's context, and that's what a lot of technical analysis is based on. So whether oil's at 28 or 78, that figure is really meaningless unless you compare it to what else is happening recently, where the key lines in the sand are. So start with a longer term and then drill down into your favored time frame. Okay. If we look at, obviously, if we look at the commodity-based currencies such as the Aussie dollar and the loonie, we can see that they've been under pressure. The Aussie dollar really has been in downtrend the whole of the year because of the commodity sell-off. At a bit of a key point again, we've had 4 tests of around about 68.30. And really not breached that as yet. Be interesting to see what's happening there now. If we do get a breach on that, this is what I mean about context. We could see that precipitate further selling, and that might be a better trade, even in the short term, than looking at the Euro USD at the minute, just simply because of its because of that context that I've been talking about. Again, we'll have a look at that, and it's probably going to be more. The oil inventory numbers may well affect the commodity-based currencies also, not surprisingly. Dennis, I will find out for you when the Thursday room starts. I think it's imminently, but I will double check that and let you know. How can Hawkeye help me with day trading options? Look, Hawkeye, we'll have a look at some live charts and some tighter time frames in a second. But really, the rules of the game are the same. We, with options, just to fill you in, we tend to use the underlying equity as the guide for making options decisions once you've decided on appropriate strategy. With day trading options, very directional trading is probably preferable. simply because what you're trying to do is you're looking to scalp small profits with bigger contracts, bigger numbers of contracts, much in the same as you do with futures. So really the principles are very similar. It's again, you've got to be really on top of, and again, looking at how it works. We can have a look at a couple of charts once the market's kicking on in there. We've got about a minute to go to open at this stage. Okay, well, let's look at, if you give me a second, let's look at, let's perhaps look at some live charts. If we open up, if you bear with me a second, I'm just going to open. So again, for those of you less familiar with Hawkeye, we use 3 time frames. So here, if you're trading long-term equities or want that sort of where everything's at, big picture, we may look at a daily, weekly, monthly. If short-term trading, then we tend to make it significantly tighter than that. The ratio of 1 to 4 is one to remember. So we may do a if we're looking at an intraday trade on any vehicle, we may look at a 60-minute chart, then a 120, and then a 240 as our 3 time frames. And what we're wanting is agreement across all 3 time frames, particularly on volume. So if we were to when the market opens, I'll if we look at the let's see if we can get an AUD USD. Oh, now because I've marked all these, we should get three charts with that. To start with, I'm just gonna shove. I've got a control panel to deal with here as well, so I'm just moving things out of the way. We'll change this to a 60. Let's shift this around a bit so it's just a little clearer. Okay, we'll change it to a 6120. So we'll do a 30-60-120. There we go. And we'll do a 120 if you give it a second. Okay. Okay, so there we've got our 3 time frames. Let's just obviously it's got to watch bandwidth with this. Let me know if that's working okay for you guys. Just going to change that 120 chart to open, high, low, close. There we go. So if we look here at, let's just pause that so we can see where it's at. So if we look here, we actually see the Aussie dollar over the last hour and a half looking slightly better. We're actually in congestion, but you'll see that buying volume come in there. That's important. And we're also seeing buying volume on the 60-minute. We would have to wait to see this in congestion at least. So we'd need uptrend on the 30-minute chart. We'd like to see, because of that that green volume there, we'd like to see the heat map turn green. We'd like to see this white at least and another bar of green. We've got green volume. We've got green volume on the 120-minute chart as well, which is so you see that you'll see that green volume on the 120 chart again. So there could be a short-term opportunity on the Aussie dollar US, which, in light of where it is, just bear in mind those key levels we talked about before. In light of where it is, that may be That may be an interesting short-term trade if you're all over the market. Now, once we're in a trade, we've got the ticks across all three time frames. I'll just mention that setup again. Then we use the fastest time frame, obviously, for exit. And for those of you who were here last week, we discussed using ATR levels as an exit, and as well as using the Hawkeye stop, which is this. You'll see the crosses and the lines, the dashes there. So the crosses are the Hawkeye stops. If it closes below that, if a bar closes below that, we're out, or if there's an intraday touch of the crash barrier. But you'll see here when if we traded this, you saw the red volume coming in as it moved into downtrend, and really the heat map came into around about this bar here. So really this was the bar to enter on. We had confirmation on the 60-minute. We're quite happy with the red volume on the 120-minute, so that would have been quite a nice trade over the last few days, and would have used this as a stop. So we'd still be in this trade, but obviously having entered there, if we see a bar close above that, then above that cross there, then we are in exit territory. I would have actually exited when there was a change in trend there from downtrend to congestion. If we were to use ATR levels, which we talked about last week, let me just put those on. We're on pause now. So if we'd entered on this bar here, say for example, let's escape on that. You'll see the ATR levels. You'll see the ATR levels there. Just pause that again. So this would have been our entry here. Now, the rule is that if it breaks an ATR level, then we're looking to move our stop to the next one. So if it breaks 2, an intraday touch of 1, or a close below -1, we would have been out. So we'd still been in this, but we would have actually been out of this trade as it had broken 6 ATR. Would have actually been out of this trade on that bar there, meaning that we made around about 120 pips on that trade there. So just to reinforce that, if it closes above an ATR level, we'll move our stop up. So if there's an intraday touch of 2 ATR below that, so if it hit -4, we'll be out, or if the bar closed at below -5, we would take it out. Okay. So I trust that's okay. Yes, these are recorded, Jim. So you can refresh and or if you're a little late. So let's take this ATR levels off. There we go. So that's the Aussie dollar US. We're really waiting for a break of a 68.85 to possibly move into uptrend. We do have that buying volume. There on the 30-minute. So it's just a case of being patient, seeing where it is at around about. In around about 20 minutes, we'll see the next bar fully formed on that. But it doesn't look at this stage as though it's going to breach that. Let's look at some equity trades. We can look at short term. Let's look at Netflix, who reported last night. Now we should see all of these change. Okay, we need to put some more bars on that. Hold on a second. Let's start by having a look at the daily chart. It's probably a good thing to do. So here's a Netflix daily chart. You'll see we are actually up $2 to $2.89 from, so that's around about 2.2%. Okay, so if we look intraday, you should see it on the 30-minute chart. Let's click this to a 5-minute chart and see what happens. Let's do 10. Let's do 15 and 30. See if I'm getting live data through. I just want to double check this. Now we're down 14 at the moment. So we've dropped off a little. The overall markets are Dow's down 250 points. So really, short term, if you wanted to trade Netflix, no signal to get in there from an options point of view. If we were going to intraday trade the option or the underlying equity, we'd need to see a trend form on that, and really looks as though it's in congestion. Levels to watch probably 107 on the downside. Wow, about 107.20 on the downside, and 109 on the upside. That would be what to have a look at. Let's just switch this to daily. We often look at 2-day charts for short-term trades, so I'll just change that to a 2-day chart. Bear with me. And then we can swing back and have a look at how our Aussie dollar US is doing in a second. And we'll do 1 week. Okay, so on the daily chart, it is really still in downtrend, but we are testing that trend dot. Let's just change this to a open, high, low, close. Apologies. There we go. So very much a sell signal still. Would need another bar of, if we see it test this, really this sort of 105 mark, it might be worth a 102 put if you're trading options or going short the equity. So we'll look at how, oops. So we'll look at, see the VIX over 28. Remember I said that VIX at 27 is important. Overall markets aren't moving a great deal. 1.72 down on the Dow, 1.75 down on the S&P 500, and the Nasdaq is slightly worse than that, but not dramatically so. So we are slightly above the low of the day, but still in fairly miserable territory. So there we see MS. We nearly broke 27. Here's what we call a wide bar. Now this would have been a little bit of a trouble. We usually, on the downside, we wouldn't enter this, wouldn't enter the wide bar. The rule is we wouldn't enter on the wide bar until there'd been a close below the bottom of the wide bar. So yesterday potentially would have been a close. Always be careful of this is ultra high volume, obviously because it was an earnings day. So really we wouldn't be very happy with that as a general rule. Where's it at today? It's down 76, down 25.50. So really we're retesting this level. I'm not sure why that data isn't live, but let's just knock that ATR off. It's a bit of a so we've got a few screens here. We've got the control screen and stuff as well as. So I'm trying to make sure everybody's there. We're just going to reload the data. It's a bit delayed. That was yesterday's close. That's irritating. There we go. So there we've got the live data today. Not really a great deal of move from open, from MS. You'll see it's bouncing around a little bit. Hasn't broken that pivot low yet. That would potentially be an entry on the on the trade on MS if you were looking to go short MS or a put option. Looking at the bigger picture, you'll see how low that is compared to the weekly. We have to go back all the way really through October 13, more than that. Wow. All the way back to the beginning of 2013 to see it at this level. There we go. So whichever way you slice it, there's a sell on that. What one stock we did like the look of yesterday was for a potential bounce if the market bounces a whole. As a leader of that was AEO. You'll see we had higher highs. And then we've just really sort of gone back into trading in a range between about 14 and 15. At this stage today, it's moving slightly higher. Just watch if we break 15 on AEO over the next few days. That may well be worth a look at, depending on what happens across the board. We do have some buying volume coming in, but it's very premature on that to even think about a long trade. Just to put up that trade we did on FXE, already had a question about that. If we, oops, I'll get to questions in a second. Probably just going to have to put our charts back up again. So here's FXE, which is the ETF that tracks the euro versus the USD. So you'll see there we sort of saw a top around about 108.50. So we, with it being in congestion, we put a credit spread expires February week 1 at 109, 110, so up here, which sort of obviously mirrors, because it's the ETF, it obviously mirrors the underlying currency. If we look at the, yes, for sure we can look at the Euro USD, see what's happening with that. I'll make it time frames in a second. Let's make it a 5-minute chart. Okay, so on a 5-minute chart, we're really in congestion. We're looking for, there's nothing there. You'll see green volume in again over the last 2 bars, but we've started to sell off again. Really, the bottom line is around about 108.95 would have us interested. Probably a break of that bottom of the wide bar. That would be the interesting level for us. That would take us probably down to about 1.08. There was the pivot lower about 1.0810. So there may be a few pips in that for you guys who trade short-term forex. Okay, just have a look at questions. Oh, where do I see the ES end up today? At this stage, let's see if we can get. I did say the futures charts weren't working at this stage. Let's see if they do. There we go. We've got an ES chart up. Right, 2 white bars, not surprisingly, at the start of the day. Really at the low of the day on the ES. Let's actually change the time frames on this. Let's put a 10-minute and a 15-minute, or maybe a 30-minute. Let's do a 5, 15, and 30-minute on the ES. Let's make that a little. Sorry, wrong way. There we go. That's a bit clearer. So if we look at the ES, so we've got this Y bar. So we may be interested in a short-term trade if we saw it. If we sort of break the bottom of this Y bar, we start to look at this more interestingly. At this stage, we are still in uptrend on the ES on the 5-minute chart, so probably wouldn't look to touch this for now. We are in congestion on the 15-minute and on the 30-minute. The volume is massive. at this stage. So really, look, I would say that the oil inventory numbers, as again we hit session lows, with the oil inventory numbers out in about 40 minutes time may influence exactly where the ES ends up. I suspect we may see a further sell-off if that number isn't particularly positive, because oil will just continue to sell off. So really, these are incredibly difficult markets to trade. It actually suits short-term traders, not longer-term traders. By short-term, I mean intraday, to actually trade how we would often trade. Certainly, longer-term equities you would forget for now. So it would be looking to scalp profits on an intraday basis. Really is where the money is in this market now. So. So very difficult to answer your question. It'll be interesting to see if it breaches 1834 in the first instance on the 5-minute chart. That may well be there. May well see some support coming there, unless those oil numbers are particularly bad. But 1830 most certainly looks on the cards. If we look at, but we are, I mean, you saw on the S&P 500 before, really we are in territory we haven't been for some time. We're below the lows of August and October, and the next big line in the sand is around about 18. So you could potentially trade that down to around about 1830, tighten your stop really tightly, and then go from there. Did I see any trading opportunities in the ES? Well, look, this was a trading opportunity here. So this was, if we look at the 5-minute chart, we could have potentially scalped some off here. Probably would have taken, it wouldn't be much. Would have probably been in on a break of that pivot high on this here, if we're feeling quite aggressive. So around about 1842, and but there wouldn't have been much in that trade at all, to be honest. So really, the trade on the ES was really last night. Yesterday morning, after the IMF came out with their announcement. That's but in Asian trading, just look at the hourly chart perhaps. Let's look at the hourly chart on this one, and you'll see really we've been trading within a little range here. We had a little dip here, but we've been trading in a range between about 1835 and about 1850 on the hourly chart. So as I said, the SPY futures were at the worst probably 3 or 4 hours ago at this stage, and so if we look at the 60-minute chart, it gives a very different picture to the 5-minute chart, which looks a bit miserable, but now it's starting to pick up again. So around about 1844 at the minute, but bouncing around quite significantly. So even for short-term trading, this is just a really tough market, and so I would say on the downside, you're looking at possibly a break of 1840 to pick up between 1840 and 1830. Below 1830 is probably where you get the blue sky. That's probably the higher probability trade. On the upside, maybe around about 1850, 1855. So breaking the high of the last hour, you would need to see that happen. You see that pivot low around here, which could be an important line in the sand. that may well see us start to think about changing trend, maybe a short term. If this was your third time frame, that might be the so maybe trading at 15, 30, 60. That might be your way in. If we look at the 15-minute chart on here, let's look at those 3 time frames. Let's reduce this again. Whoops, apologies. Let's just bring that up. There we go. So if we change that to a 30, this to a 60, so there's that exceedingly high red volume. We'd need to see. Interestingly, we've got a green. We need to see a break of that wide bar high for it to change trend. But you do see green on the heat map. That's interesting. This volume will be green at this stage. So there could be a trade there over 1855 on the short term. So have a look at a roundabout. As I said, I wouldn't do anything until after those all inventory figures are released, unless you're watching this like a hawk and trading very short time frames. There was a question earlier on really short time frames for trading binary options. There's no real reason why you can't use exactly the same principles with binary options. I would just you might try 1, 2, 4 minute charts. Probably a little too tight for me. That's not really my bag. But certainly depending on what binary option strategy you're using, you'll be looking at very tight time frames such as that, or indeed tick charts. Look, day trading options are again not something I would do often, but really this market suits it. If you take the attitude that there's 390 minutes in a trading day, you might look at a 78 130 sorry, a 130 no, 70. Let's just work this out in my head. If we chose if you can on your chart, look, I'd probably go, to make it easy, probably go a 6120, 122.40 if you were trading options. So if we looked at Facebook's doing these days, let's look at what Facebook's doing. Let's just I'll just give more bars here. Let's only as default. There we go. So there's Facebook trading dramatically down today again. Yeah, Facebook getting slammed even on a 60-minute chart. But higher than open, which is sort of interesting. Change the data series on this. This is Ninja I'm using, by the way, which a lot of the guys use for, quite commonly you'll see people use Ninja, add Hawkeye to it as a plugin, and then subsequently trade on another platform. Ninja doesn't do options. Some people would trade TradeStation and then and use their options platform. But yeah, Facebook that break of about 90 around here. This was a pretty crucial line in the sun that opened. I'll just change the color of that just to make it a little bit more obvious. Let's make it light blue rather than dark blue. There we go. Which is its high of the day. If it's around here, I would probably be interested in day trading this if it if it holds this level. Look at, again, if we look at a 120 minute, you'll see again we've got the low test in the wide bar low from really a couple of days ago, and so that so a break of today's low would have me interested in this in a short-term options trade potentially, or a short stock trade. Just looking through the questions again. Check the VIX for you. It was going up, and it was up over 28. Notice the banks again, battered again. S&P 500 down 1.5%, so it's not actually going very far, very fast. There's a miserable looking futures. Let's move you guys out the way again, so 1.5% down. VIX at 27.76, so that's actually dropped a point since there it is. So that's actually dropped a point really since we've been on air, which is interesting. Remember, 27 is that key point. We're looking really at a fairly miserable picture right across the board if we look down. FXE, which is we've already talked about, but everything else is a nice deep red color. FXI is the Chinese ETF. These are stocks that I've been tracking. Fertilizer stocks, which did look interesting a couple of days ago, absolutely hammered today in light of that IMF report. But really everything's looking pretty dramatically red. The banks are getting absolutely caned on. Apart from GS, which is holding up okay after its earnings result. eBay is another stock reporting today. Down 51. Okay. Put our GS back up and see where it's sitting in terms of the day. Yeah, so there's GS, which is looking, which is off its lows. Interestingly, GS 154 on GS. That might be a line in the sand to have a look at in terms of where that sits in the bigger picture of things. If we look at a daily chart on GS. So you see there, we're retesting that pivot low potentially with the low of today. So again, I would want to see that that broken last hour before we'll be interested in this. GS, the trader hasn't hit this for a long time, this level for a long time. Let's have a look at the. We did express an interest in Aussie dollar USD. We'll start with the daily chart. Again, we're significantly off our low. We're certainly not in entry territory again. FXA, if you're interested, is the ETF. You could have a look and see what liquidity of that options on that isn't particularly good. Let's put the Aussie dollar US on there. But there we see we've mentioned this key line in the sand previously at around about 68, 68.90, 68.80, which will be an interesting place. We are retesting that, so just keep an eye on the Aussie US over the next hour or so as the all inventory figures are numbered. We do have green volume if we're looking at the 120. Let's change that to if we look at the 60. So this is our 1, 2, 4. So second time frame double that of the first time frame, third time frame double that of the second time frame. We're not out of downtrend on the 60-minute yet. We'd need to see that at least in congestion. We are getting buying volume coming in, and you'll see the downtrend is suffering a little bit on the hourly chart, and that's why we see congestion on the 120. So there is potential there on the Aussie dollar if you're patient enough. We need to see a couple of green bars on the 30-minute, but I would suggest that with the oil inventory figures out in 23 minutes. See how the see what the immediate response is, and then wait for the next one. You could change that to a 15-minute. 15 minutes. So the 15-minute has actually moved into uptrend. We could have actually entered on this bar here based on the green volume, but with our, let's just change this to 1360. There we go. So if we look at our, remember our 3 time frames. So what we're wanting to see is green trend, green volume, green heat map. So that would have been a tick on a break of these pivot highs. That would have been a tick on this bar. Okay. So we would have entered around about 68.77. Would that have been okay from our other time frames? Well, if we go to our, so that would have been 1, 2, let's forget the current bar, 1, 2, 3, 4 bars ago. So that would be 2 bars ago on our 30-minute. So if we looked at our 30-minute, we'd be looking at this bar here. We do see green volume again. So if we're feeling aggressive, it's broken that pivot high there. Although not significantly. We are so that will be a very aggressive entry, and we do see also green volume here on the 60 minutes. So that would have been a potential Hawkeye entry if you're feeling particularly brave. And as I said, I wouldn't be trading this prior to the oil numbers. But if we were in it, then we'd probably be pretty around neutral in terms of where we got in. But certainly those would be the 3 time frames you could have a look at immediately at when those oil inventory numbers are released. See what the first 5 minutes does. Wait till the end of that bar, and then if we see a move up higher, then around about the 68.80 mark, that might be a potential entry to look at. Yeah, 1830 strike price would have been fine on that. Is Hawkeye also incorporated in horizontal volume? I'm not sure what you mean by horizontal volume. It really, the way it's a fairly complicated algorithm that the volume is worked out on. It's not just on current bar. It looks at the price bar as well, and its relationship to previous bars. Large moving card pairs. Let's have a it's interesting. We'll have a look at a couple of Canadian dollars. You don't have the green and white circles that sit above and below the Rob, if it's these, you mean if it's the trend dots, then that's, I'm guessing you're just on the volume package. Drop me a line at mike@hawkeyeoptions.com. Let me know exactly what it is. If it's the how do you know whether most volume is on the bar itself? Is that, do you mean whether it's buying or selling volume? That's really its relationship to its point on the price bar, and comparing that with previous ones. As I said, it's about a 64 point algorithm that goes to work out those trends and volume bars. Okay. Anything else you guys would like to have Anything else you guys would like to have a look at? I think we had a slight blip in the system there for a second. The Aussie dollar looks as though it wants to go a little higher, for sure. but we are most certainly off our lows of the day in terms of the overall index. Still struggling to get over 68.80.
Connection.
Just having a little. I think we're probably. What we'll do is we'll just pause this screen. I think it's. Whoops. There we go. So just looking through your questions here. Seeing if I've missed anything. Oh, look, medium term or over the next few days, much of it depends on oil. It would be nice to think that the earnings would start to become the reason for the market moving, earnings and data, rather than a general fear of what may or may not happen going forward with China. It would be nice to see that, but I'm not convinced that might be the case. So close some things down. Are you seeing a crash coming? No. I think that if we look at where the economy is as a whole, the data isn't bad at this stage. There would have to be a significant, if you mean by a crash, are we likely to hit a bear market? A bear market would be around, a break of that 1800 would be 231 points drop from its high. So in essence, that's nowhere near bear market territory yet. So I think that, look, are we going to see a 10-15% drop? Well, yes, look, we're in that territory already. Is it going to hit bear market territory? There would have to be something else happened. Some major geopolitical stuff. We'd have to see oil down, trading around 20 bucks a barrel, I would think. The data is not coming in bad. Earnings are coming in sort of okay. If the China market stabilise, we see some reasonable China data coming in. I think that those may be the things that may help create a bottom. Where that bottom is, well, look, 1800 is a pretty crucial level on the S&P 500. So I'm not. I don't think we're going to get the 15-20% from here that some people are suggesting, and the data is just too good. Is the bottom line. Interest rates are still historically low. The Fed, I don't think, will raise interest rates again in the foreseeable. Certainly in the next 2 or 3 months, I don't think they dare, because of the impact on emerging markets, which are obviously pretty crucial to the general good feel. Oh, look, the problem with, okay, yeah, I've heard the 1600 on the ES as well. Look, the problem with that sort of number being banded out there, it's not based on anything solid apart from picking a random line in the sand. Usually people who do that don't state a time frame that they think that's going to happen in. To say loosely, we could see 1600 in the next year. Well, we could equally see 2200 in the next year as well, depending on what happens in the world. So that sort of stuff is just nonsense. It's just people wanting their 5 minutes of fame on CNBC. So that sort of, yeah. Look to the key levels. Of course, we could see 1600 on the US, but yeah, there is no evidence that is imminent, even though the overriding sentiment is bearish. Yeah, oil is one of the reasons why the market's struggling a little bit, and mostly that's because of its implications to major oil-producing nations. The US consumer will actually be delighted that oil is where it is, and so consequently, if you believe that the US economy is driven by the consumer to some degree, then because of low oil prices and consequently the lower prices at the pumps, then you would imagine that would put more money into the pockets of the consumer, which ultimately would result in more spending. So as you saw from today's inflation figures, if you took the CPI as a whole, which takes into account oil prices, it was deflationary. But if you looked at the core CPI number, then that was still in positive territory. So it will be interesting to see how this plays out. But I don't think it's a done deal that would I don't think it's a done deal that that we're going to drop. And as for Obamacare, I agree. There's no evidence of discretionary spending yet, but that tends to be a lagging indicator. And you're obviously more au fait with the ins and outs of Obamacare than I am, but and look, yes, the housing market isn't. The figures today were mixed. We had building permits up, we had new home sales down. So again, a mixed picture in real estate. In real estate, in terms of retail. Earnings will be the key factor, and you need to. It's as I said, AEO bounce. Most of the retailers have had absolutely rotten year, undoubtedly. It'll be interesting to see. They're usually right at the back end of earnings season. Yeah, let's have a look at Macy's, because that's an interesting one. We're actually looking at Macy's last week as one that's potentially looking okay. It's just there we go, Macy's. So we do see, if we look at, let's just change Macy's to not having a very good day today, but neither has it fallen off a cliff. So Macy's are actually an uptrend on a daily chart. We've had high highs, a couple of days pullback, and we're now sort of around this pretty critical 38 level. We look well supported around about 37. And so $40 is the key mark. So in terms of retail, that's actually holding up okay. If we look at JCPenney, the opposite is the case. JCPenney are a bit of an interesting bag. Whoops. Apologies. AEO, you saw the chart before. The gap was still looking very ordinary until recently. Let's have a look at the gap in a second. But there's AEO holding up okay and actually pushing up today. We could, as I said, look for a break of this pivot high on AEO. That's maybe an interesting trade. A GPS. So if we look at the gap, so the gap's pretty miserable. There's been in miserable territory for a long time. There's inherent problems with that as a retail stock, and you'll see it's actually breaking to the downside. So retail is actually quite a mixed picture, very stock specific rather than a general sector move at this stage. So it's interesting. I'm glad you brought that up. That's an interesting thing to have a look at for sure. Yeah, that's Walmart's action is actually socially pretty pretty sad news for sure. And there's a Walmart chart just out of interest, holding up pretty well, I guess. 61 key mark. If it breaks 61, that might be worth a look. We might see that move into downtrend, but it's hard to be sympathetic towards Walmart when there's fairly significant social implications of their store closures. I did hear that news, and it's never it's never good to hear, no matter whether you trade or don't trade, and the implications on a particular asset. That's never good. That's never good things to hear, for sure. There's the Walmart chart. Okay, well look, I think I've answered most of the questions that you guys have given me. It's heading towards that all inventory. Perhaps we'll stay online and just see what the implication of that is on our AUD USD position or potential position. Yes, I know. Okay, just checking through. We've covered everything. When you compare the Hawkeye with the volume with the MT4, it looks very similar, Gene. It does, and rightly so. That the actual level of volume is correct. It's whether it's buying or selling volume, and that's not necessarily. So here's what we see. Here's why volume is a leading indicator. Let's just take Walmart as an example. So what we see is green buying volume coming in before it's an uptrend. So this is the crux of the matter of volume spread analysis. Is if volume is a leading indicator, if we see buying volume there, that often can be a precursor to a trend. So what it means is it puts it on our hot list in terms of one that might actually move. You won't see that on any other chart unless it actually indicates buying or selling volume. What you'll normally see is if it's an up bar, it'll be green. If it's a down bar, it'll be red. That's not buying or selling volume. It's just another reference to what the price has done. So although that's useful to some degree, it's not actually predictive in any way. What volume spread analysis is about is looking at the supply-demand side of things, which undoubtedly is seen in volume first before anything else. Most other indicators that we would have on a chart would be lagging. So that's the crux of it. If we look at other trends, we see. Let's look at that. So we saw the green volume coming in. We could have taken advantage of that. That's obviously an earnings bar, so we would have closed out any trade before that. With the white bar rule, we wouldn't have entered until this bar here. We could have taken advantage. You'll see that with selling volume still very much in place, and we would have taken advantage of that up until about this bar here. Again, you'll see green volume coming in 2 bars before it actually went into uptrend. So again, that will put it on our radar. That would say, hey, look, this could be happening. And again, if we look down here, you'll see 2 green bars of buying volume coming in prior to that uptrend kicking in, which would have enabled us to take advantage of that. Although me personally would have waited until it had broken that pivot high there before I got in. Hope that explains it, but I'm really glad you brought that up, Gene, because it is important to differentiate between just volume that mirrors whether it's an up or a down bar and volume which is buying or selling volume. Okay, I think I've covered it all. It's just, how are you guys doing in your trading? Well, what's the major challenges you've got? Just out of interest is I asked the question last week, and it seemed to be that exits were the thing that I know a lot of the energy, and it's really sexy to look at entries and etc. etc. But for what people were suggesting last week, it was and it was one of the reasons I spent quite a lot of time on it last week. Is exits seem to be the thing that cause people the most angst. It's easy to get into a trade, but I did an interesting little experiment, if you like, with a group of clients that I had. We did an exits rule OK project, and what we did was it was with equities, and it was just bought call options, but it would work with any vehicle and any. We could do exactly the same with Forex and long. And what we did was threw entry criteria out the window, and said, right, for 21 days, starting on this date, you tell me which stocks we're going to get in. We're going to just buy a straight out of the money call option, and put an exit strategy in place on entry. And interestingly enough, we still, in those 21 days, we still made over 20%. And the purpose of me doing that was not to be a smart ass, but really to try and readdress the balance between the amount of energy and effort people put on entries and the amount of energy and effort they put on what happens next. You should be an exit guru. That's where the profit's made or lost. Your win-loss ratios don't matter if you screw your exits up. All it'll take is one real bad one. It'll remove. You could have a 18-2 win-loss ratio, and you have those two bad trades. If you haven't managed the exits well, can remove the value of the 18. You might have heard me talk about the 250% in a year. You might have heard that talk, and really most of that was made over a period of 9 months. And in those 55 trades, I think there was one. It was 28 wins, 27 losses. It's almost a 1-to-1 win-loss ratio, and that's fine with directional trading. It's your average win versus average loss. Now, the average win on a particular trade, when a trade went in our direction, it was 60%. When it went against us, it was 21%. So we had a 3-to-1 average win versus average loss ratio. So that combined with a 1-to-1 win-loss ratio worked. So win-loss isn't what it's all about. It's what happened, what you do next is the point I'm trying to emphasize. I'm not trying to impress you with figures. I'm just trying to impress on you how important it is that you become an exits master as well as an entries master. And so how do you feel? Does that resonate with you guys? It's certainly there's a few comments there saying, yeah, look, exits are more of an issue than entries for me. That's my general sort of feeling. It'd be interesting to try on a Forex. So we just randomly pick Forex pairs and a time frame, let's say an hourly time frame, and a time of day that we'd enter, and just see what happened if we put in an exit strategy without any entries. So I got clients that because there was no manipulation of it, there couldn't be any manipulation from it from me. Are the stops large? Look, with Hawkeye options, we tend to use the trend dot as the stop, or an ATR level. So as I tried to explain before, Hawkeye ATR levels, what they do is they actually draw the levels on the chart when you enter, and generally speaking, our stop is at 1.5 ATR below entry, and then if it pops up to 2 ATR, then essentially we move our stop up accordingly to a close below 1 ATR, or an intraday touch at 0, and then keep on moving that up. So there's 2 or 3 different ways we can exit. The Hawkeye stop and crash barrier really is what is often used in the short-term day trading. across futures and forex. But really, there are a few different types of exits, and what you've got to do is really find your own groove with it. As I said, become a master of your exits. Work hard on that. I'm just going to have a look at the AUD and see what that's doing, because the all figures are out. No, it doesn't look happy again. There we go. If we switch that to a 5-minute chart and see what's happened since the inventory numbers were released. There we go. It's got whacked. So we were testing. We were looking to test this level here. That was our potential entry on this. But we're obviously
connection lost.
We're obviously retesting that pivot low, and it could be actually we'll see the downtrend on the 15-minute chart. So we could be looking at a short trade on the Aussie dollar US. Let me just see if we can find out what's happening to oil. As I said, it's a bit irritating that we can't, for some reason my futures data's gone down. And then we'll probably call it a day.
Connection lost.
Some strange... Let's just pause it. Oh yeah, it's really flying down now if you still look at that. So let's just have a quick look at our let's look at a 15 and let's look at a 30 chart. Push you guys out the way a second. Let's see what Hawkeye is telling us. So we're in a downtrend. We're testing this pivot low now. We've now got red heat map. We've got red volume coming in. And on the 5-minute, and the 15-minute was still actually an uptrend, which is surprising. So that's not an entry just yet. We need to see that go white. We've got the red there. We'll probably see that change at the end of this bar. And 30 minutes are in congestion with red volume coming in if we look at the last two bars. So we're waiting for the 15-minute to join in the party. And obviously you'll see that's a potential move. There's maybe not more than 10, 12 pips in that for those of you who want to scalp it in the first instance because of these pivot lows here. So be careful for sure, but undoubtedly that's not good. Let's look at let's also look at what's happened to the ES. So if we look at 0.316, and there you see we've lost all we're certainly on the 5-minute chart. We've lost most of the gains that we look to be clawing some back, but we're now retesting that. I'm moving back towards that 1830 level, which looks as though it's pretty critical in the day. That was the low of the Asian session as well. We're holding on in there.
Connection lost.
Okay, we're flipping in and out a bit. Oh, Gene, I can't agree more. Stop management is absolutely crucial. I don't have a lot of experience with the Nedex. Does the longer does the longer time frame affect the slower time frame, or the other way around? They affect each other really. Sometimes it's hard to be patient. You see a move on the shorter term, and it takes a little while for obviously the others to catch up. Conversely, we could have we quite commonly see, for those of you who like buying on pullbacks, we quite commonly see the two slower time frames still looking. Let's say we're going to go longer position. We still see those in uptrend, and that really, we get that pullback on the faster time frame, which gives us a really nice entry, a really nice high probability entry if we then see the a move higher after a pullback. And certainly Nigel Hawkes, who many of you have heard speak before, it's one of his favourite types of trades. Okay, guys. Well, look, I think we'll probably call it a day. We're not going very far, very fast. We're trading within a range of about 8 points on the S&P 500 over the last sort of 35-40 minutes. So really, since that opening frenzy. So after that first 20 minutes where we had the two wide bars, when we broke into downtrend, we could have entered here, but would be struggling to make a trade on the ES that would be earning us much money. But it does look as though the sellers are slightly more in control still, even intraday. Let's look back at our Aussie dollar US, which was really a trade we've had a look at a few times over the last hour and a half. Yeah, that's looks pretty solid to have moved down. Look for those pivot lows there. That's really I would say quite a crucial level on here as we move into the next 5-minute bar. We're still moving downwards fairly sharply. So that's 68.50, 68.44. Looks important. Okay, guys. Well, look, thanks for your participation and rocking along. It's been great to have you along. Some great questions there. Really appreciate it. I trust it's been useful and given you a little bit more insight about Hawkeye and how it works, and volume spread analysis, and possibly a couple of things to have a look at. Lastly, of course, I would just want to say thank you. Trade safe. Remember, there are some markets which, if they're too difficult to trade, you should keep your capital on the sidelines and wait till the markets are slightly easier to trade. So don't give yourself permission not to trade if you don't feel good. For those of you who are interested in looking perhaps to add Hawkeye volume to your toolbox, there's a $97 offer for that. If you're already on that and want to add the other things like the ATR levels and the trend and all of the other whiz-bang stuff, then for sure drop me a line at mike@hawkeyeoptions.com. That's mike@hawkeyeoptions.com, and I'll give you the information that I can. Okay, guys. Well, look, take care. And I'll see you sometime soon. Michael, thanks very much for your, and also Ron, thank you, mate. Cheers, Rob, you're very welcome, mate. Okay, guys, take care, and bye-bye for now, and see you soon.